Charts is a human psychology, right? If market is not interested, I don't want to buy a dip and just hold it until I see a reversal. So I think maybe next year we can catch up run on those growth stocks. But right now everything is slow. Last year we had a few repeatable setups. We were the growth stocks, like Twitter, they were trending for few quarters. Every earning they are beating. EPS is 50% or more, sales and revenue, and they have a consolidation on the chart. And you just take those range boxes up and up and up. You ride them all up. Futu, FUT, Futu was an example. We started trading it from 30 to 50 bucks. We took it to $200. I mean, everything was running that time, but that's just an example. And we have very few example of those kind of growth stories this year, right? I mean, IPOs are going crazy, but there's more of a hype there, and there's no consolidation on all these IPOs, right, which go. I think you and Snowflake, some of them have came back, but you want to see consolidation. So for me, Amazon, I think it's all about level, support, and resistance. Why 3,600 was very important. 3,600, so it broke out of 3,600. We took the trade. We took it to 3,760. Now I think the next breakout will be over 3,780. Low float trading is, people don't really look at. I've been talking a lot about these bag holder charts. I don't want to be in this trade. I don't want to be long here. Why? Because it's a bag holder chart, right? I will long. Okay, I remember we used to talk about lots when we were here in February. Yeah, I was bullish on clothes because I believed in what they're doing, their hype. But your conviction has to have certain level of risk or technical level. So I still remember those who listened to me, they stopped out on 10 because 10 was a big psychological level, right? And that's it. We were not there. I don't care, because I don't want to be here buying here. I don't want to be buying here and then somebody selling. Why do you think the stock bounces here and sells here? Do you guys think? You just think, okay, it's a great stock, Clove or whatever. Because all these people right here, they are in loss. They want to get out of stop break even. So this was the people who bought here. That's their break even. So somebody who's buying here is selling to somebody who bought here. Same thing. These people they are losing, and then losing. Who is making money? Is anybody profitable on this chart? See, the story can change. Somebody was telling me, okay, the stock is a great stock. It has a great fundamental story. It's a gem. Okay, I agree, right? But when it reverses, I will be the first one trading it. I don't want to hold it from here to maybe $2 wherever it goes. But when it reverses, let's see. Okay, bag holder, they come. I will not even buy it here. Right? I know lots can do a lot. If market doesn't agree, why would you? Market doesn't agree with your sentiment. So anyways, I would like to see this get over 5 first. 650 later. Why? Because more volume it churns in this area means a lot of the prior, they are quitting on this stock, new buyers are coming in. So you want to see a lot of volume churn here for weeks, months, and all that. And when the reversal story starts, it means the prior bag holders are out mostly, and the new buyers are in, fresh money is coming in, fundamental story is finally going to change and taking its course back. And then you want to see this, then why this? Because I'm churning out all the prior bad money. Then slowly it will do this, then maybe this, then this, then this. That's how a reversal story starts. It doesn't happen overnight. So somebody was telling me, okay, Clove is a good company. Okay, I'll be buying. Maybe I don't even think I'll be buying here. I want to see more consider. Maybe I'll be buying here. I don't care. I don't get the bottom. But when the reversal story starts, it probably goes 7 to 20. And mind it, I'm not saying Lots is going to do it. I'm just giving you example of a person's mentality, how the trader, investor, whatever they hear and they come in and try to buy bearish stuff. If you follow me, I don't care about RSIs. I don't care about any MACDs or nothing. Support resistance is the first thing. If you have to follow something, the first you need to learn support and resistance. Support and resistance, then start for find your trend trading system. What is a trend trading system that you believe in? For me, it's EMAs. I use EMAs purely to understand the trend. How is the trend? Let me zoom out. Going long or short any stock, right? Let's take example of LCID, what we were doing the other day. Any stock you're trying to go short or long, you need to understand the trend. First, you need to know your conviction. Okay, you think it's a good buy, right? Then you need to see what is the trend, right? If it's a bearish trend, well, you don't want to keep adding in a bearish trend. What would tell you? For me, the EMAs tell that, right? If I look at the daily chart, okay, the daily chart is trending up. So it's my closer blank here. One second. Look at the 10-minute and 1 hour. What has LCID been doing? So since it's over 34 and 50 EMAs, so the base EMA is 34 and 50 EMA that I use. It tells me if it's under 34 and 50, it tells me it's a bearish trend. If it's over 34 and 50, it tells me it's a bullish trend. Then I decide how, what I need to do, how I need to trade it. And if it's under 34 and 50, then that's a short for me. So 1 hour gives you a high level view. And when you are swing trading or day trading, then you go to my system is 10-minute. And here's the thing, you don't really have to use what I'm using. It's a baseline. All I'm saying is you have to find a system. I use the 10-minute. I have tested it with thousands of charts, hundred of back testing. I do live trades in front of everyone on Twitter, all timestamp trades, that it works. So my thing is to shorten the learning curve for newbies who trade randomly. Find a system, right? If okay, the EMAs work, because I believe in them. I have a conviction. I will add to a trade if I see the trend holding over those EMAs. If you don't even try something, it won't work for you. It works on 10-minute, it might work. Some other EMA might work on 5-minute or 3-minute. You just have to find your own system. For anyways, so 34, 50, and then I use a 5 and 12 EMAs. So what was LCID doing, right? So LCID has been on constant trend, huge volume. You need to see, also focus on the volume, right? On the daily volume. What do we see? The volume, since it started a big breakout, and the first of all, it's not how do I take trades. For me, patterns, breakouts are most important. So this was the level where we started trading LCID. Right. So what do you see? It's a consolidation range for a long time, for many weeks, many months. If you understand this one basic concept, anybody who's on the boot camp, this the one that I'm explaining right now, you can build your own trading system based on it, and you can probably have set for your life, just understanding one simple concept. No indicators, nothing. So what was LCID doing, right? LCID was, and I also do if you want to see the highest high or more recent high and lows, and that's how I use it. I don't make it complicated. And Fibonacci is not, it's not that complicated. Many gurus make it too complicated. It's just how much the stock has retraced from its highest point. Just you want to see how much retraced. So that's how I use Fibonacci. So anyways, so what do you see right here on LCID chart? From February 21st, it broke that, and then it, till it didn't break out in October. For 6 months, it was in that range, right? You can also create a smaller ranges, but bigger the range, bigger the breakout. If I put it on the weekly chart, then you'll see what I mean, right? So what do you see here? It's not that difficult to look. People just don't want to look. They just have cluttered their trading platforms with so many indicators, right? Which they think is just a magic formula to make money in the market, but it is not. The price is in front of you. Just follow that. So, and mind you, LCD is just one example. Anybody who takes pain to go on my Twitter page and search the tickers, I have hundreds of examples like this. AMD breakouts, Nvidia breakouts, even low float breakouts. Right? You just need to know the levels. So, anyways, when LCD broke this level, that's when the big trend. Also check out the volume. What was the volume here? There was nothing volume, no volume traded for 6-7 months, nobody cares. But when LCD finally broke out of 28 level, and which we traded live, and alerted live, and I always said, don't anticipate. It could have easily rejected here again and came back to 18. Let it confirm. Let it confirm. And more times the resistance has been tested, bigger the breakout. So it's right. So many times you see right in there. And a lot of people might be surprised today. A lot of people who trade LCD, oh, it's next Tesla. They don't have any clue about what this chart means, right? They just know, oh, LCD is next Tesla. Then why was LCD not next Tesla in March? If you invested money in LCD in March, you for 6 months your capital was stuck, right? Okay, if you're an investor, you mean it's next Tesla, that's fine. But as a trader, for those 6 months, that was your opportunity cost. So why to get stuck, right? Wait for the time when it's the right time. And you could have made much more money and hitting it right time. Either it's an option trade or if it's your swing trade. Any swing trader who has been holding LCD from $18 and who added at $28 and who is still holding is 150% up, right now. Even if you're a fundamental trader, these breakouts happen. That's an added skill you must have. Because it will make you more efficient and give you more conviction in your trades. Anyways, so once I knew this breakout was happening, right, we started our swing trade, and over the swing trade we do I do trading around the core, where we trade the breakouts, short-term trades, all that. So what happened next? So then we go to hourly charts. Now we know the daily is broken out. Hey, where should I rebuy LCD? I told them as long as LCD is over $30, that means it's going to go higher because it's out of that range. And even gave some 35 levels. You just have to look charts. So the dailies. Now you try to understand 1 hours. What does the 1 hour say, right? Somewhere here was the breakout. You see the 1 hour, same support level at 1 hour. That was not a coincidence. It was bouncing there. And guess what? What was right there, right under there? It was 3450 EMA. You might not even need an indicator like this, right? If you are so confident and you have so conviction, support and resistance, but still it helps to have a trend system because you can scale out on extensions. Anything which is way extended from EMAs, you can sell, scale back in. So this is how the 1 hour was doing. And what was the 10 minute doing? So if you look here, this is called chop. What I call chop is, let me show you. Let me see if I can zoom in here. When the price moves around the EMAs, and it's just chopping around, right? There's a big sell-off on LCD, right here on 9th of November, 47 back to 42. Short-term traders shorted it. Why did they short it? Because it broke the 3450 10 EMA right here. See, anything that gets extended, if a stock has ran from 30 to $50, it's just not going to go straight up to $100, right? If it's a growth stock, it's a hype stock, it will still go, but there will be pullback. You need to understand that. If you're just holding a stock, a good trader might have traded LCD 10 times up and down, right? An active trader. Okay, investor is fine who is holding from 28 breakout, that's fine. But even if you are an investor, you would have taken profit $50. That's a big psychological level. Stock went 100%. There's no guarantees in the market. You can't just trade blindly. Oh, it's next Tesla. And this is just one example. I'm saying that's how a lot of people, new traders, trade. They don't want to understand a trend trading system or something like that. So anyways, so then what happened? LCID, all that, the 1 hour chart is still holding trend, bouncing, still in trend. Daily chart is holding supports, up, higher lows, higher highs. And then what happened? One fine day, then LCID wants to break out of that zone again. And check it out. Big bounce, and 3450 EMA, boom, $60. And then big extension. Yeah, it was a big move for one day. Of course, profit takers come back. It breaks the trend again. And check this out here. It rejects 3450 right here. Right. And see, this is nothing like a holy grail. People say, if you have a holy grail indicator, you gave us this, blah, blah. No, it's not like that. You can use anything. You can use a volume profile. You can use anything. Just support resistance. Everything has a confluence at a same point. EMAs just tells you what market is doing. Where are the buyers and sellers have a confluence? That's how it is. This point might be something else on a 3-minute, some different EMA, right? A volume profile might tell you, right? And some people use some customized VWAPs. It might tell you that's a reject there. So my point is, I have a system that guides me. And support resistances first. A lot of people tell me, hey Rip, your system is good, but when I try to use it, I can't execute. You can't execute because you don't believe in it. And then they say, hey, it broke there, but it bounced right away. But I said, it's not absolute, right? You have to know where your support and resistance is. If I say here, LCID bounced, why did it bounce here? It has been bouncing here in the pre-market same level, right? It's just not the EMAs. So open your eyes on those things, right? You have to. So don't be blind. Trade with a system, repeatable system, and then it'll sit again 10-minute, and it's just you can trade it every day right now. It's high volume liquid stock, but just an example. So hopefully that helps. But again, it's for me, it has to be a chart. A chart has to trend upward or has to consolidate at certain level. Anything that's down, like Roku, I don't care how much conviction we took it for so many times, from $100 to 100. I mean, we had so many good trades. But when market doesn't love it, don't chase. It's bearish. I told Roku is a bearish at 300, selling down for last 3 quarters. Nobody cares. It's the best company in the world. I mean, Roku might do great in 1 year, but are you able to hold Roku for next 1 year while it falls from 234 to 200? If you are an investor, yes, you can buy a solid support level. But even then, nobody wants to be in a drawdown, right? Especially a trader. So just wait for that consolidation and just wait for a strength in the chart. That's how I would trade these large caps, growth stocks. Can you do a monthly or weekly candle on your chart? You see where it's broke 70. You see that, right?
Yep.
70. After that, it went to 90s, back to that 70s, went to 90, 95s again, and it tried 100 once, and then back to 70s. What is it doing? It's building a range. And this range is not a daily range. It's a monthly range. 70 to 100 or 70 to 95, but 100 is a psychological number, big psychological number. So that range, whenever a range breaks, right? And ideally, bigger the range, bigger the breakout. 115, that is half the range it had a previous range from 70 to 100 or 95, right? There's a 30-point range, or let's say 25-point range. So ideally, a 50% of that range is the breakout. So that's what happens. People just see the daily candle. Oh, it's zoom out. Look at the bigger range. That's how the institutional investors trade, right? If AMD ever falls back 100, if market crashes, it might. But now the institutions will come back in that 9500 range every time it goes there. And then from here on, from next few years, the AMD will be story going toward 150 if it keeps showing the growth. So now it's not only the short-term traders came in. Long-term traders also came in on this breakout, which are not going to sell until they see 150 or whatever 200. So it's, you have to understand the time frame, psychology, everything, right? I might be trading short term, but there are a lot of long-term investors in there too. They risk differently. Long term might risk $70, might risk at 75, 25, 30 points, but he's looking for double in next few years, right? So it's risk reward. So that's how you play it.
Can we talk about game for a second?
So what happened? We were playing the catalyst, or because we knew these litigations, something is going to come up, right? So that's why we were playing. We took it from $10, $11. I was alerting, and the news came. The news came, and that what we were expecting. And in after hours, it did touch almost $15, almost 50% from where we had it. And I was expecting that, the market will take it in a good way, right? When they sued DKNG, but it right away, it sold off the day one, right?
Okay.
So, I didn't take any profits in a pre-market. Some folks did, right? And then it started selling off from there, and it's kept on having a weakness. And then my stops were the IPO or the uplisting lows. 850 is the stops I gave everyone, right? So basically, I stopped out of there, and that was the stop I gave. And for me, if my conviction, my technicals are more than my conviction, right? If
Okay.
it broke 15, I knew it's going to 20 because the market is bullish. Market wants to join it, and this is, doesn't matter what you believe. You have a conviction. You play something, but if market doesn't believe in that, you will see in the technicals.
After that.
So there are two types of trades that I usually do. One is a run-up trade, and even in a run-up trade, I want to see a reversal or like a key level breakout or reclaim of strength into the earnings. That tells me that buyers are coming into the earnings. Then I will take earning run-up trades. I probably haven't alerted any earning recently, but we used to do a lot of these in last quarter, and before that, get some earning run-up trades. And second trade I do is after the earnings, and I am only interested in the stocks which are trading closer to their all-time highs or 52-week highs, like I mentioned last time. Any stock which is at lows at earnings, all-time lows or 52-week lows, even a good earning bounce is excuse for a lot of traders or investors to get out. And even it has less probability of making a big move. So I am usually interested to see, the strength in the chart before the earnings and then the breakout after the earnings. Weekly, if you see the weekly candles, all of them had a VIX at 67. Back
So
from
here are the
February.
weeklies.
The zoom out, better the picture. All the new traders don't just look at 5 minutes, 10 minutes, or one daily. Zoom out, look at like the complete life cycle.
Yes.
Now you see how the apps has been trading, right? I have been trading, alerting it from $20, and we rode it all the way up, and it has been in this range for last 6-7 months. The real trade will be when it breaks 90. I'm telling you now, when apps break that 90 or 100, it will go to 150. You can set alerts. I don't know, it will next quarter. I don't know, next year, maybe. I don't know if this earning is good, who knows? But that's how you trade it. Also, Apple, don't forget Apple, even though market is at highs, and it's kind of a slippery slope, but Apple has that strength. If it breaks 150, we can get some trade to 152.5 or something like that. So Celsius is a high growth stock. Last November, I alerted it at 20, $30 after earnings. And after that, it just ramped up to $60. After that, I didn't really touch it because it had extended and it was in a range. But it's definitely a stock to keep eye on. It's building a flag into earnings. You said earnings are coming up? So it's building a flag into earnings, can break out over 72. If it shows really year over year and the revenue sales growth is like, let's say it's 100% or something, these things can go bonkers over $80, right? So just keep an eye.
Or what sorts of things occupy your desktop?
Benzinga, Squawk on chatter flow and stuff, hype or social media, my Twitter, my Discord, chat with my friends. I made a good money on next week's. Just use the profit money to take some calls into, for this week. If it's today's Tuesday, maybe I would have taken Friday's call, out of money. And if it works, it works. If it doesn't work, I'm still profitable, right? It doesn't really make sense here to buy monthly calls because that I would do once it goes back to 100. Right here, I would rather do weeklies using the profit money that we have already. Yeah, I mean, it was. I usually don't these days. I am not don't trade much options. I just do shares. But AMD is so liquid and lucrative, so that's it was one of big trades last few days on AMD. These are once a year trades like the AMD breakout, and once these happens, you just need to be on top of this.
So how do you find a stock like this then?
Well, this one came from a follower. It's called IPWR. Bidirectional switches, how the switches are used in circuits. So they are used in EV, electric vehicles, solar and military and everywhere. There's so many smart people out there. So this guy, he sent me the complete information. Then I reviewed it. I also talked to hedge funds who own it. I did my research, and that's how I figured out that this has a lot of potential. Market cap is nothing. And again, They released a white paper on January 11. That's when the big spike happened. So now they have to keep up. I believe there will be some updates coming soon, which they will say, well, how are they progressing on their contracts? What is the future of the growth? That will be a big pivot there. They still have to prove themselves, but the potential is multi-bagger if they execute.
So is this one that you'll hang on to for a while to see like how it's moving or what it's doing, that kind of thing? Like how will you do this?
The other day when I alerted it was 18, 19, went to 25. People took profits. You scale out. You can't just hold a position if it goes 50, 60%. Even if you're a long-term investor, you have to scale out, scale in, scale out, scale in. Sell at a certain point. You are already made some profit on that position, add it. So that's how I do it. I scaled out a little bit earlier, but I added a big position at 20. So now my target is 30. But again, I'm waiting on management updates, what we get there.
Yeah.
One more question you asked about, the options, how far. If you are buying an option in consolidation, right, then you are already ready for any theta decay, because you don't know when it will get out of consolidation. You don't know that, right? You can assume, some news is coming out. But if you're buying in a consolidation, give it a 1 month at least. Give it time. If your account permits, give it that time, right? But if you're buying a breakout, then you can buy a weekly if you are a knowledgeable trader, or 2 weeks, because then the move is going to come. Theta doesn't matter. You can take the profits. But if you buy in consolidation, you have to make sure you give time. So that's the difference. So first rule of trading an option on breakout is you add small, right? If you want to buy 10 contracts, buy 3 contracts, or 4 maybe.
Okay.
As soon as the breakout confirms, add. Don't worry about the limit order. I mean, it should be liquid. It shouldn't be spready. Add on the breakout. Now you have 3 and you add 6, 7 more. You have 10 because the breakout confirms, and then you let it ride. It goes a certain position, 50%, scale out some. Never let the position turn red. Goes to 80%. I have full set of rules on Twitter, and scale more. So what it does, let's say the stock doesn't break out. You have those 3 contracts. It falls down, you can take a small loss, right? But when you add on breakout, you add more contracts, you are looking for substantial reward, right? So otherwise, you add small. So that's always the way to do it. Keep losers small, add small first, let it confirm, add more. Because if it's a good breakout, you are going to have a good trend and you are going to have a win, right?
Got it.
You are not scalping it. So it doesn't make sense. So it doesn't make sense to go all in 10. Oh, it's breaking out 10 contracts, market order. No. So that's how you do it. I just know. I just draw the chart. I mean, it's clear. People complicate things. People want indicators. People want, RSIs, magic rule. No, it's right in there. Clean your charts. Look at a bigger viewpoint. Look at 1 year. Look at monthly, weekly. You will know how many times the price has failed from that point, and you will know. And then you look at intraday. You can look at 10 minutes, 1 hour to confirm your breakout. So that's how you do it from the breakout levels. You can also use Fibonacci levels. If a Fibonacci on IPOs, if a Fibonacci and the resistance is the same point, that's always a good breakout. If a 50% retracement of an IPO is trying to break and there's a resistance there, it's a good breakout. So that's how I identify breakouts. FLNT. So it's a digital marketing company, like apps, like
Yep.
companies, right? So it's a small company, right? But the revenues are growing. EPS grew 900% year over year. The sales grew 21%. And if you look at other marketing companies, how they are doing, or the digital companies like apps, so you have to see the sector, how the sector is growing. So I believe, and the chart is breaking out. I think I mentioned my rule. I want to see a breakout, and then I look at the fundamentals. So the chart is breakout. It's going to 10, and then the fundamentals EPS is growing. So I added this position this morning. So let's see where it is when we meet next time. But it's yeah. So it's good. So what they do is they work on the lifestyles and purchasing history.